Dear friends, welcome to our YouTube channel eCommerce for the World. In this video, the question for today is, what else you should know about income tax filing ITR by e-commerce sellers before filing income tax returns ITR. The details that you should know, that the details that all e-commerce sellers should know before filing income tax returns. This is the topic for today. As you all know, every assessment year we need to file this income tax return. Normally, income tax return is filed annually, whereas the GST holders, as the mandatory GST holders who does e-commerce business, they used to file the GST returns every month. And GST return every month is mandatory. Similarly, income tax returns to be filed annually is also mandatory for all GST holders. GST holders in the sense almost all the e-commerce sellers who are doing e-commerce business with various e-commerce platform or even own website. Okay, and this year, the assessment year, we call it as the assessment year is 2024 to 2025 is this assessment year. Normally, we used to file the income tax return for the previous year. Previous year, that we call it as financial year. That is the year ended just this year. Okay, that means we used to file income tax return for the preceding year. So this month, the video that I am recording is July 2024, and this assessment year is 2024 to 2025, and for this assessment year, we used to file return for the financial year, that is the previous year, 2023 to 2024. Okay, and normally the month of every year starts from January and ends with December, whereas in the case of financial year, the 1st of April of any year, starting with that 1st April till 31st March of the next year. So this 12 months period we call it as financial year. Okay, so we used to file income tax return for the financial year, that is the previous year, during the current assessment year. Okay, so that is the fact that you should know, and we should not get confused with financial year and assessment year because financial year is the current year and the assessment year is the current year and financial year is the last year, just before this assessment year. Okay, and what are the details that all e-commerce sellers should know before filing income tax return is that if the income tax form that is applicable for e-commerce sellers are either ITR 3 or ITR 4, and in case if the income or the sales turnover is lesser than 2 crores, normally in the income tax return this given as up to 50 lakhs turnover, right? And we have to file income tax return using the form ITR 4, right? Whereas if the income exceeds 2 crores, right? Then we need to file ITR 3. Okay, that is the form. The e-commerce sellers can file either ITR 3 or ITR 4, and if the income is less than 2 crores, then ITR 4. If the income exceeds 2 crores, then ITR 3. But actually, in this income tax form, while filing, it was given up to 50 lakhs turnover is ITR 4, and if it exceeds that 50 lakhs, then ITR 3. Okay. So that also has to be noted. Then there are two tax regimes which are available, that is new tax regime and old tax regime. Normally, when you file the income tax returns, right, the default tax regime is the new tax regime. That we have to note it, because there is an option for either following the new tax regime or old tax regime, but the government has given by default the new tax regime as the default regime. In case if you want to switch over from new tax regime, which is the default tax regime, then we need to fill up another form. Only then we can able to change from the new tax regime to the old tax regime. Normally, what auditors say is that, suppose you calculate your income and then we can calculate the income, and then with respect to the old tax regime and new tax regime is to compare. So whatever is beneficial we can opt in. Okay, but still there is an limitation for opting it, because as a salaried class you can switch over from one to the other, but as a business class you can shift either once or maximum twice, right? Beyond that we cannot change over from one tax regime to the other tax regime. And one more thing is that, in case if you are not filed income tax, then when you are forced to or when you try to file the income tax for the either the particular year after due date, right? Normally, see, the year has ended in the 2024. The financial year has ended by 31st March. So March completed, and March, April, May, June, July. So 4 months time is there in order to file income tax return. That is April, May, June, July. So July 31st is the last date. Okay, every year normally, even 2024 also July 31st is the last date. The government may extend sometimes. Okay, but we should not depend upon the extension. In case there is no extension, then we need to pay fine. Okay, and even also file income tax return after this due date, that is July 31, 2024. But we need to pay a fine of 1,000 rupees, and you can pay till the next starting of the next financial year. That is the 1st April. Till April you can pay till 1st April. Just before 1st April, okay, that is 31 March. Right? We can able to file the income tax return, but with a payment of fine of rupees 1,000. Okay, so better we file before the due date, that is July 31st. That is one. So regarding the old tax regime and new tax regime, the default tax regime that is available in the online when we log into the online portal of income tax department, so it is available. And suppose if you want to switch over from the new tax regime to the old tax regime, then we need to fill up another form, and only after getting approval in that particular form, only then we are supposed to file the income tax return using old tax regime, because the form details we need to fill up in old tax regime is different, and new tax regime is quite different. And among various income tax forms, ITR forms, this form, that is the ITR 4, is the simplest form among all other forms, and this ITR 4 is based on presumptive taxation scheme. That is, we need to declare a particular percentage not less than 8% of the total income, or income means receipt, whatever we are receiving as our income. So normally before filing the income tax return, we need to check this annual information system report, that is AIS, where each and every details of the operations, financial operations that are carried out will be scanned, and it will be available as a report in the annual information system report. Okay, so that we need to check, because before filing income tax returns, we need to by checking this annual information system AIS, we can able to know the interest that we got received from various banks, right? Even I was quite astonished by seeing the fact that I received so and so interest from different banks, right? So this normally we even have not thought of, but since the banks, almost the bank accounts that are linked to the PAN number, also the Aadhaar card that we provide to banks before opening the bank account or during some KYC updation process. So each and every banking system, they have our PAN number and also the Aadhaar number. So these banks will update whatever the financial transaction that we do, and it will report to the government. So based on that report, the annual income or annual information system report will be generated and is easily available. When we try to file the income tax return ITR 4, then before filing we need to verify that, and we can utilize the data also before filing the income tax returns, and that will be very useful, because the entire GST filing that we do every month, that will be available, and together totally for the particular financial year, 1st April particular year to next year 31st March, whatever the transaction that we carried out using our GST, and whatever the receipt, sales turnover that we achieved during that particular financial year is easily scanned and easily available as a report in the annual information statement. So we can utilize that because based on that particular income or the sales turnover, not income, sales turnover, we need to provide the government that what is the percentage of profit that we have made using in that for that particular sales turnover or receipt. So minimum of 8%, but in the form it is actually given as 6%. Okay, 6% if it is through banking system, and 8% if it is through cash. Okay, that is the, while we filed the income tax return, it was given, so that also has to be noted. Normally experts say that minimum of 8% of the total receipt has to be declared as our income. So that means not less than 8%. That means at least we should declare an income as or income as some around 10%, or even you can declare income as 20%, nothing wrong, or 15%, nothing wrong. Okay, so like that we need to first of all we need to, based on the annual information statement, we have to get the data. So how much lakhs turnover we received, so we need to feed that particular data, right, from the annual information system, and then for that particular GST sales turnover, we need to give the presumptive assumed, that is presumption, right, percentage, not less than 8%. That means either you can give 10% and above. Okay, so we have given 10% as presumptive income received from gross GST sales turnover. You can also give 10% or 15% or 20% or even 25% or 30% also, depending upon the e-commerce sellers. No problem. Okay, that is one. And then one more important thing is that through this annual information system, we can get the interest received through various savings bank accounts. That also has to be mentioned in the income tax returns. That is also very important, and there is an option to give, and it's mandatory to provide that, right? So then there is an option as salary. Even those apart from businesses, if they do some jobs, that also can be declared in this ITR 4. And this ITR 4 is not only for exclusively for business, but also business plus salaried people can also file this income tax return. And another concept is that in this we should all e-commerce sellers should know before filing ITR 4 is that you should mention the value of the inventories that are available with you, right? Suppose if you have around 1 lakh or 2 lakh worth of inventory, then we need to mention that. That is a mandatory detail to be filled up just before. Only then we can go to proceed to the next step of filing the ITR. Then we need to provide how much is the cash in hand, right? That it depends upon you. You can give either 5,000 or 10,000 or 20,000 or 1 lakh, whatever it is, right? Give the genuine reason, nothing wrong. And there are few e-commerce sellers who provide, apart from GST turnover, they used to provide huge lakhs of rupees as turnover in order to show as a proof to the banks in order to get loans. But our suggestion would be that whatever has been is there in the GST turnover is more than enough. If you provide more than that, then in future some problem arises due to discrepancies in the online transaction carried out and the actual transactions that has been declared. So therefore, whatever we give, you let us provide as a genuine input to the government, right? So if you provide genuine input, then there is nobody else to question us, right? We have all the proof, because as per GST sales turnover we are declared, so nobody can question us. And only if you give some false information, that will create a lot of problems, and we are supposed to give other supporting documents, right, which we will be unable to provide. So at that time we will face a lot of consequences, such as fine, or we may be supposed to pay a fine or some percentage of taxes to the government, right, as a fine. So that can be avoided, provided if you give the exact details of the GST turnover, and from that presumptive income from that particular GST turnover, that will be fine. Okay. And apart from this inventories, right, we need to also provide cash in hand, then also bank balance, that we can provide, no problem. Or you can take the detailed statement for a particular 1 year financial year, and then from the details of the bank statement, at the end of the statement it is given opening balance this much amount, and debit transaction, total transaction this much amount, and total deposits this much amount, and then at the closing of the bank statement this much balance. So like that, the bank itself will give you detailed statement that you can able to utilize it. Okay. So this we need to provide. Only then we need to when we file income tax return, we can able to proceed to the next step. Okay. And there is one more option. When you find this annual information system report, there is another option called business receipt. Okay, that It is nothing but the TCS or TDS that has been paid by, right, this e-commerce operators. That is the only thing that has been given. So we no need to worry regarding business receipt. Okay, and main important thing is that whatever the GST sales turnover, that we need to provide exactly the data from this AAS system. Okay, and once you know these details, then we can easily file the annual income tax returns. And for e-commerce sellers, ITR 4 has to be filed before July 31st. Okay, thank you friends, thank you so much for watching. If you have not filed the GST and if you have not filed the ITR 4 for e-commerce sellers or ITR 3 for e-commerce sellers, please file before July 31st, and that is the last date. Beyond that, you can also file, but with a fine of rupees 1,000 till the next financial year, right, or the that is 2025 31st March. Till that we can file, but with a fine of 1,000 rupees. Okay, and thank you so much. If you are not subscribed to our channel, please subscribe to our channel. Whenever we have free time, we will share our e-commerce journey experience. Thank you friends, thank you so much for watching. Bye.